Let's talk about switching to the upper time frame for trading. This chart is the US dollar Canadian dollar 5-minute chart on the October 25th. By reviewing the chart, apparently we can draw a trend line at the top here and then at the bottom here. It is an upper channel. However, when you are doing the trading real time, you will feel it is very hard to decide when to enter the trade. And then if you enter at the wrong timing, you could get stop out. Let's take a look at the trading here. After the open of London Open, it goes down and then it goes up to make a higher high. So at this point of time, you're waiting for a pullback and then trade upward. As the trend goes down, you're waiting for a bull bar. So that's gonna be a pullback and you're gonna trade on the bull bar to go into upward. You can see that the first bull bar is this kind of a doji bar, which is not a good signal bar. And then you're gonna wait for next few bars until you see this bull bar. So this is a good bull bar, and then it could serve as a signal bar. So when you put your buy order on top of this bull bar, you're gonna get triggered the next bar. However, the trend continues down, and if previously you put your stop at the bottom of this bull bar, you're gonna get stop out. So you get stop out at this bear bar. And then as the trend goes on, there is another two bull bars, and then these two bull bars can confirm the upper trend as well. If you use this bar as the signal bar and then put another order, so you're gonna get triggered in this doji bar. However, the trend goes down again, and then if the same thing, if you put your stop at the bottom of this bull bar, you're gonna get stop out at this bar. When you had the second stop out, it is a big challenge to you, whether you can continue doing the trading or you want to take some time to calm down. So it's really something you have to think about. However, afterwards, you can see there's another big bull bar that's higher than all the previous 6 or 7 bars, and it can serve as a very good buy signal bar. And then you can enter the third trade at top of this bull bar and then get triggered the next bar. And then after that, you can see the upper trend resumes, and then until it hits the upper trend line. So if that's the case, you can take the profit here. If you hold the third trade until the end of the trend here, touching the top trend line, you're gonna get back all the loss from the first stop out and the second stop out here. And then in the end, you are making profit. However, you might ask, why do I have to have 2 stop outs? Is there a way that I can avoid 2 stop outs? Yeah, there is a possibility. When you take a look at this chart, you can see that there's so many bars in one leg. The down leg here, there's so many bars. The same thing for the upper leg. So one thing you can notice is that there are a lot of overlaps among all these consecutive bars, and each bar is very small. It's like a 2-3 pips. And one solution is that you switch to the upper time frame. So by looking at the upper time frame chart, the view is clear. So we can choose to use the 15-minute chart here. on this 15-minute chart, we see more trading hours. So again, let's take a look at the trading opportunities here. Previously, we had two stops because we saw a signal bar to buy. However, on the 15-minute chart, we don't see that. This is a doji bar. It is not a good buy signal bar. And then until here, we have the bull bar, which is very strong, that can serve as a signal bar. So we enter the trade on top of the high here, and then we didn't get stop. And then the trend goes up and then hit the upper trend line. That is the exit. So you can see that by switching to the upper time frame, the chart is clearer. Another thing you notice is that because we are covering more trading hours, you can see if we draw a trend line here, and then draw bottom trend line here, we have a better view of the chart. So basically, here is a breakout of the upper trend line here. That's the confirm of the reverse of the downward trending to the upward trending. So we are more confident to trade at this bar. By trading the upper time frame, there is a very obvious drawback that your stop is larger than normal. That's because each bar here covers 15 minutes rather than the normal 5-minute chart. So your stop is more than 5-minute chart. So the solution is that you can reduce your trading position to half or even 1/3 of your normal position. So your absolute stop loss is the same. Okay, so let's have a look at this 15-minute chart and how it works on other days of the same USD and CAD currency pair. So this is the October the 21st. So you can see that the chart is clearer, and we can draw a trend line here and here. The pattern is very obvious. It's breaking the upper trend line and then pull back this here, the bear bar, and then next bar, bull bar, is the signal bar to buy, enter the trade, and goes up. Let's take a look at the next day. Okay, it's the same pattern here. We draw a trend line, downward trend line, and then it is a wedge shape. Here it breaks the upper trend line, pulls back, and then we enter the trade here. You can see that it goes down, but here it doesn't touch the low of this pullback, and then it reverses back up. Very strong trend, consecutive bull bars, 1, 2, 3, 4, 5, 6. It's like it's moving on for 1.5 hours. Okay, so this is the one we just talked about. And another thing you can see is that the reason that we're getting here, the high here, and also the high here, is because we are testing the previous day's high. Next day, seems that the very similar pattern, that it's a downward trending here, but the channel is tighter. And then it breaks the upper trend line, pulls back here, and then there is the buy signal bar here, and then it didn't go down to break the level, the pullback level here, goes up, though it pulls back again, but in the end it goes up here, and also it's testing the previous high again. Let's take a look at next day. Okay, so this day there is interest rate decision for Canadian dollars, so it's a different story. I have another video on how to trade on the event date, to use the lower time frame chart, like 30 seconds. And then this is today. You can see there's not much volatility because the previous day there's a big drop here. So this chart here makes sense. There's not much movement. Hope you enjoy my video, and thank you.